Welcome to How Does Relief Funding Affect Your Taxes? Please note that the review of your tax situation using the information contained within this guide is not a substitute for carefully selecting a qualified tax preparer and should not be used in place of legal or accounting advice when needed. During today's conversation, we will discuss the impact that the receipt of certain relief programs may have on your business when it's time for your annual tax filing. We'll cover state relief programs, federal relief programs, and the receipt of in-kind supplies. Both the Commonwealth of Virginia and the U.S. federal government dedicated many resources to child care programs to support them through the COVID-19 pandemic. Relief funding received saved many businesses, perhaps even your own, from permanent closure. While these relief funds were highly needed and well used, many child care business owners have wondered how this funding will affect their taxes. Different relief funding programs will have varying impacts on your federal and state taxes because different funding sources are governed by different tax laws. Also, the Commonwealth of Virginia has set some regulations on how to file your state taxes, which differ from the federal standard. After today's conversation, you'll be able to recognize key relief programs and their general tax implications, identify the general impacts of relief programs on your 2021 tax filings, and use this information as a resource as you prepare to file your taxes. Most state relief programs, including the Virginia ARPA Child Care Stabilization Grants, provide funding to cover costs you have already paid or will need to pay soon. Basically, the state's intent is for the funds to reimburse you for your costs. So you may have these essential questions. Will my taxes go up, and are my expenses still deductible? First, you must report the funds as income on your federal taxes. This means that the federal government will tax your grant money at your federal income tax rate. Because you will need to pay taxes on relief funds, your tax bill will most likely increase. However, this can be offset by the ability to claim expenses paid for by the grant as a business deduction. So again, yes, you must report the funds as income on your federal taxes. However, you're still able to claim the expenses as a deduction that were paid for by the grant. So that will help to offset the tax liability or the increase in your tax liability. A, due to the funds that you've received, and then B, the ability to have those expenses covered will be a win-win situation for you. Next, there's federal relief programs. There's the Paycheck Protection Program. If you received a PPP loan in 2021, the federal tax implications are different. Neither the loan revenue nor the forgiveness should be included on your federal tax return. The income and forgiveness on your PPP loan is not taxed, and you can take the expenses as a deduction. There is one important exception when it comes to filing your state taxes. The Virginia Department of Taxation limits the federal deduction for business expenses funded by forgiven PPP loan proceeds to $100,000. This means if you received a large PPP loan in 2021 and used more than $100,000 for business expenses, you may only claim a deduction of $100,000 on your Virginia state tax return. There's also federal relief programs such as the Families First Coronavirus Response Act, known as the FFCRA, and the Employee Retention Tax Credit, known as the ERTC. These funds were available as refundable tax credits to help reimburse payroll expenses that you maintained while your business operations were impacted by the pandemic. Funds received from the credits are not taxable and will not be included in your gross income for federal or state tax purposes. If you receive the credits for staff wages, however, you will subtract the amount received from your total wages expense because these funds cannot be deducted. So the takeaway from the ERTC and the FFCRA is that A, they provided significant stimulus funding to businesses to help offset the cost of wages. However, the inability to deduct the amount of wages that were covered by the credit may increase your tax liability. There's also federal relief programs in terms of the EIDL, the Economic Industry Disaster Loan. The EIDL provided funds to help businesses through the COVID-19 pandemic, and it had two components. First, the EIDL advanced a grant to the recipient of up to $10,000. This advance is not taxable and should not be included in your revenue on your taxes. Second, the EIDL included an option for a loan. If you took on an EIDL loan, it is considered business debt. The debt itself is not deductible or taxable, but you can deduct your interest payments. On your federal return, expenses paid using the EIDL funding can be itemized as deductions. However, for your Virginia state tax return, expenses paid using EIDL funding cannot be claimed as a deduction. So be mindful that the federal and state guidelines do differ. And there may be cases where you receive supplies rather than a grant to buy the supplies. There may not be a tax liability for you, but you should consult with your accountant or tax preparer to determine the best way to record the donation. So getting ready for tax time. If you've received pandemic relief funds, it's likely been and will continue to be critical to your childcare business's financial operations and recovery. Even though this support can increase your tax liability, the new income which it offers you is valuable. The best way to prepare for this taxation is to organize your expense documents, things like your receipts, payroll reports, etc., and differentiate the source of income used to pay for your potential deductions for federal versus state purposes. This is because what you are allowed to deduct may vary for your federal versus state filings, as we discussed earlier. You should then set aside an amount of funds that equals your marginal tax rate so that you are prepared to pay any owed tax. If you are unsure, you can just use 22%, which is the most common tax rate in the US. For comprehensive tax prep strategies, please view How Do I Prepare My Business for Tax Season, which is also available on the vecf.org/ARPA's website. That will contain many helpful other tax prep strategies so that you are well prepared for tax season. There's additional resources available to help strengthen your childcare business, also on the vecf.org/ARPA website. This includes easy-to-read written guides, webinars, recorded tutorials like this one, and more. If you would like additional support on this topic or on other business topics, please view the coaching calendar to register to join a small group coaching session. Thank you.